Good afternoon, everyone. Wanted to say thank you for joining us this afternoon. My name is Steve Burke. I'm a business advisor with the Washington Small Business Development Centers. I'm usually used to doing live presentations where I can see everybody. I'm hoping that you can see and hear me well. I do have a partner, Viva, helping me with this, who will let me know if there's something not happening. But I do appreciate your joining us, and I hope that you get a little bit out of this. For those of you that do have questions as we go through this, please put those into the chat function in the screen that you see. I will get to them at as many as I can after the end of the actual slide presentation itself, but I won't be answering questions during the slide presentation. The object today is to go over some of the basics of legal entities, what constitutes a legal entity, what are the basic elements of a contract, and then where I've learned a lot of this is in my 20 years of commercial leasing as a background. I've been with the Washington Small Business Development Centers for almost 11 years. The WSBDC is a federal state partnership available nationwide, actually the SBDC. I'm going to give you a little bit more information about us at the very end of the slide presentation, but while you're going through this, at any point in time that you want to ask a question, put it in the chat, and following the presentation, if you want to reach out to us, I'll be giving you some contact information about how to do that. So today we're going to cover types of legal entities. What's the difference between these types, sole proprietor, general partnership, and LLC corporation, and then what really is an S Corp and a C Corp. Types of contracts, commercial contract, leases, what are the elements, and we're going to move into the basics of lease agreements and lease contracts, basics, defaults, and lease negotiations. All of this I've spent a lot of time at, but I've got to give you a basic disclaimer. Neither the presenter nor the Washington Small Business Development Centers can provide legal or tax advice. We're not attorneys. I'm not an attorney. We're not CPAs or other licensed professionals. For any legal or tax decision that you make, we recommend strongly that you always seek assistance from your licensed professional to help you with that. I am going to give you some of the basics, a fairly broad overview of some of these things, but at the same time, I hope to be able to give you some distinctions that will help you understand the difference of these things and the purpose and your ability to utilize them as a small business owner in the most effective way. So one of the key things about a sole proprietor or a general partnership, where you've got some people who've just come together and formed what's called a general partnership, you, the owners, and the business are the same legal entity. And as such, the assets and liabilities of the business are cross-connected to the business entity, whereas an LLC or a corporation are separate legal entities, and these hold the assets and liabilities, with the idea being, as you may know, you want to protect the owner's assets, but they can't protect your assets if the legal entities do not behave like legal entities. So let's dig into this a little bit more. Overall, the types of business and legal entities are all established at the state level, not the federal level. The business owners are the same legal entity in a sole proprietor and general partnership, as I just mentioned. And then you have to get a business license from the Washington Department of Revenue. The creation, though, of a separate legal entity includes limited liability company for professionals that are licensed by the state as those professionals. They can form what's called a professional limited liability company. And Washington State also allows for a corporation. A couple of things to note. Washington State does not recognize an S Corp or a C Corp, and these are not legal entities within Washington State per se. The purpose of these is primarily for federal tax designations. I frequently talk to clients who say that they are organized as an S Corp, and that probably in most cases is not true. They may be organized as an actual corporation in Washington State, but more often than not, they are organized as an LLC, and then they are electing to file with the federal IRS to be taxed as an S Corp. But an S Corp in and of itself is not a legal entity in Washington State. C Corps have other federal disclosure requirements to stockholders, and if you're going to list your company with the Federal Securities and Exchange Commission, the SEC, and other agencies that it might apply, you pretty much have to be a C Corp to do that, to be able to trade ownership shares and that sort of thing. Washington State also requires all businesses, regardless of your legal entity, who receive equity investments from others to register with the Washington Department of Financial Institution and follow disclosure requirements. The idea being that under Washington state law, and to some degree under federal law, they want to avoid people being duped into making investments in businesses that are extremely high risk or may not even be legitimate businesses at all. So there is a requirement that if you receive, even from family and friends, money that is invested directly into the business, you are required to register with the Washington Department of Financial Institution and follow those disclosure requirements. And you can find that stuff just by Googling it in terms of the Department of Financial Institutions and a lot of the information that you need to follow those disclosure requirements. The basics of business entities. So, as I've mentioned a couple times already, in a sole proprietor or a general partnership, the business and the owner are the same legal entity. You still have to get a license from the Washington Department of Revenue. An LLC can be a single member LLC, or it can have multiple members. The legal entity for this case is created with the Washington Secretary of State. Then, once you have created the new legal entity, then you get a business license for that entity from the Washington Department of Revenue. What's the real purpose of doing this? Most people who choose to be an LLC, and I'm not giving advice as to whether any small business should or shouldn't, I'm just explaining how this works. In reality, an LLC, and the reason why people do it, is to have some sort of claim that if somebody, customer of theirs or a vendor or somebody else or even an employee is damaged by the business, that it's the LLC that damaged them, not the owner who is trying to use the LLC to protect their assets. We're going to talk about the steps to corporate compliance in a minute. But before we get to that, we'll talk about taxes. First, though, corporation. Established with the Secretary of State, also like an LLC, then you obtain a business license with the Department of Revenue. The difference between an LLC and a corporation is that a corporation is created by the Articles of Incorporation and controlled by its bylaws. The owners are stockholders, and the corporation is governed by a board of directors. People who work in the corporation are W-2 employees, including the senior leadership. Employees can be stockholders if allowed by the Articles of Incorporation or by state law or federal law. An LLC, kind of going back again, can be a single member or a multiple members. A single member probably doesn't need to have an operating agreement, but if it ever does have additional members, or you contemplate having additional members, then you're going to want to have an operating agreement. And I'm going to cover the elements of an operating agreement. So to summarize, in an LLC, multi-member LLC, the operating agreement is the actual contract, if you will, between the members of the LLC. In a corporation, it's the Articles of Incorporation that determine who are the stockholders, the percentage that each have, and then all of that is governed by the set of bylaws. What about the tax basis? For a sole proprietor and even the individual members of a general partnership, taxes are filed on a Schedule C of your annual 1040, meaning that the LLC doesn't necessarily file a separate tax return unless it has multiple members. And if it does have multiple members, then those multiple members would receive what's called a K-1. And that is what then is entered into the individual members' personal 1040. And the Schedule C is the schedule of the business income and allowable business deductions. Members of an LLC cannot be W-2 employees, and you can't leave money in the business. All the profits after the allowed business deductions are taxable and filed on the owner's Schedule C. For an S-Corp, if you are an LLC and you elect to be taxed at the federal level as an S-Corp, which is a specific election that you have to make with the IRS. When you make that specific election, then the owners of the LLC can be W-2 employees and money can be left in the business without it being taxed as profits. The LLC, as I mentioned before, files a separate return and reports those profits via a K-1, which is then entered into the Schedule C of the 1040 of each individual member. In a C Corp, all employees and owners pay income taxes and the corporation pays income taxes. I should back up and say that an LLC as a separate legal entity is not taxed by the IRS. So as the entity, but all of the profits are considered to be income to the owners. But in a corporation, you have what's considered double taxation, where the employees, owners, typically W-2 employees, if they work within the organization, and they then pay taxes on their wages, as does everybody who's a W-2 employee. And then the corporation pays taxes, and anybody who gets a dividend from the corporation, that becomes income to the individual, and they pay their own taxes based upon that. So complicated matters. Certainly if you're unclear about any of these things, consulting your CPA to get real specific information about how this applies to you. My purpose in talking about this today is to let you know about these things so that you know the kinds of questions to ask of your licensed professional when you get that chance. So I'm going to cover now what are the 29 things that typically need to be addressed in a multi-member LLC operating agreement. This really applies, and the basics of this are true, although they're covered differently. But the basics of this are true for a single member LLC for the things that apply. But most of these things in a corporation, in the Articles of Incorporation, they also cover these topics. It may be slightly different, but these are the kinds of things that really have to be decided if you're going to have multiple owners in a business. What's the name of your LLC? Where's your principal office? Who is the registered agent? I would highly recommend that the registered agent should not be you. It should not be somebody who is a member of the LLC. And why? Because if you ever do get sued, the process server, who is required to deliver the service, has to look up your LLC on the Secretary of State's website, and it's public information. And then they have to deliver that to the registered agent. If the owner is the registered agent, then they're going to find the owner in front of their family, in front of their customers, in their business, wherever they can find them, and serve the lawsuit. So there's a lot of reasons to have a registered agent. And in Washington State, all registered agents have to be registered and licensed as such with Washington State. So it's easy to find a registered agent. You can Google registered agents in Washington. You get quite a list. Make sure you vet whoever it is you decide to do that with. But for maybe $100 to $150 a year, they will act as the place for the arrival of legal documents, purpose of a registered agent. You also need to determine who the initial members are. You have to decide the ownership interests of each member. Who's going to own what percentage and why? Number 6 here, decide the amount of capital each member will contribute. So who's putting that in? And in number 7, are people going to be granted a portion or an ownership interest solely for the performance of services? Sometimes this is common. 2 partners get together, they decide to form an LLC, they have an operating agreement. One of those puts in most of the money and the other one does most of the work. That's a common arrangement. So as I had mentioned, when you have an operating agreement, really the way it's written, and I highly recommend, and in fact would really strongly encourage in every case, that if you're going to have multiple members in an LLC and prepare an operating agreement, that you utilize an attorney to help you. However, if you want to save yourself some money relative to this, working with this attorney, go through the 29 items. I believe that you will all receive this slide deck. Go through the 29 items that I'm going to finish covering here. Decide that yourself, and then go to your attorney and say, here are the things that we think we want our operating agreement to be. If you are asking the attorney to negotiate between you as to what the answers to these questions are, then you're going to spend a lot more money than if you've done some of this decision-making yourself prior to meeting with the attorney. Number 8, will the members face penalties for failing to make their capital contributions? So then you've got to decide how cash is going to be distributed, meaning profits. Is it going to be pro rata, return of capital, preferred return, return of capital? These are various ways in which it can be done, as shown here. These has to be decided and should be in your operating agreement. If you do ever get tax refunds, how are those going to be distributed? Or is it going to go just back into the operating cash flow of the business, the LLC? What are the procedures for admitting new members? You have to decide who's going to manage the LLC. Is there going to be a member manager or a group of managers? Is it going to be member managed or manager managed? So you can hire somebody separately. And this really should be determined so that people get clarity on who starts and primarily organizes the decision-making process of the business. You then decide under what circumstances a manager may be removed or resign. You should also identify, are members of the LLC going to be employed by the LLC and working within it? And how is that going to work? As I'd mentioned, you really cannot be W-2 employees unless you own a very small minority share. But primarily owners receive and have taxed all the profits of the LLC as shown on a Schedule C of the 1040. If you are a single member, but if you're a multi-member, then you would have a separate tax return for the LLC, and the profits would be decided up between the members based upon this operating agreement and sent to them on a K-1, all of which gets reported to the IRS. How are decisions going to be made? What are the rights, the duties, the liabilities of the members and managers? Decide under what circumstances members can transfer their interest to a third party. Decide whether there will be buy-sell provisions. Decide what will happen upon the death or disability of a member. You have to determine who's going to actually pay attention to the tax issues and identify that person. Decide under what circumstances the LLC can be dissolved and terminated. Decide under what circumstances the operating agreement can be amended. If you're ever having a dispute, is it going to be settled in a court of law or by arbitration? Decide whether the members will be subjected to a confidentiality restriction. Decide whether the members will be subjected to a non-competition restriction. Which state law is going to govern the LLC? Typically, if you're formed in Washington, it's going to be Washington. Make sure all members sign the operating agreement and store your operating agreement safely. And you've got to amend it when it's required. Now, there are 5 things that you really have to follow here to be able to earn that limited liability protection. And this is true for either an LLC or a corporation. As I'd mentioned before, the LLC or the corporation has to behave like a separate legal entity. If they don't behave like a separate legal entity, then what happens when somebody sues you is the plaintiff's attorney, who's representing the person suing you, you're the defendant, goes to the court and says, Your Honor, for these reasons, the LLC doesn't even behave like a separate legal entity. We can't tell who's the person and who's the business, and therefore it doesn't deserve to have the limited liability protection. If the court agrees, then that pierces the veil and they can go after the individual owner's assets. So these are the 5 steps that you have to be sure you are following in order to behave like a separate legal entity and earn the right to have the limited liability protection. These things are all discoverable in a lawsuit. So you've got to keep your business in good legal standing by filing all required reports and paying all taxes, state, federal, and local. And in a lawsuit, they're going to request to see all these things. You have to keep proper business records, including an accurate and timely set of accounting records, typically according to the generally accepted accounting principles known as GAAP. Number 3 is the one that is the deal breaker for many small business owners, and that's the commingling of the business assets with personal assets, including ensuring all business income is deposited into the business bank account. If you ever have a customer that pays you something and pays you in cash, and you take that cash and you buy the groceries for yourself on the way home, that is commingling the business assets. All the money, including cash, tips, whatever it might be, that's generated in the business has to go into the business bank account first. If you ever get audited, it's the business bank account that's going to be the first place that auditors look. Or if you get sued, you're going to have to be able to provide not just your financial records, but your business bank account as proof as to how the cash flow in and out of your business was working. Number 4, you have to keep an arm's length between the personal activity and the business activity. A lot of sole proprietors or even small businesses work from a home office. It's even more so true today, as you can see. I'm working from my home office. All of us are working virtually these days. The key here, though, is that if you have a home office, you should be claiming that home office as a business deduction on your tax return. If you are not, and you are primarily working out of your home office, and you're not able to claim the tax deduction, then there is some ambiguity about what's the personal activity and what's the business activity. And one of the basis for that is that in order to claim a home office business deduction, you have to have your home office in a place of your home that are used solely and exclusively for the business. It's not a place where you do your stock investing later, where you have the kids are playing video games on it, that sort of thing. It's a kind of a portional place in the home that is used solely and exclusively for the business, or it doesn't qualify as a home office deduction. So all of this winds up being discovered in a lawsuit. So this number 4 is really important. Doesn't seem real obvious based on just the words, but in the end of the day, it winds up being important, as is number 5. You have to be sure to identify your business by its business name: marketing, signage, correspondence, invoicing, all of that. These are the things that have to happen in order for you to earn the right to the limited liability protection. If any of these things are vague, unclear, or aren't being followed, then you open up the possibility that the plaintiff can pierce the veil and go after personal assets, even if you're an LLC or a corporation. Well, let's talk about just commercial contracts, kind of the third part of our presentation today. In Washington State, there are very few laws. There are some, as we'll see in a minute, but there are very few laws that show or state what has to be in a commercial contract, including a lease. And there certainly aren't any laws that say what's fair or unfair. I've dealt with a lot of clients who have signed a lease contract and claimed that after the fact that what it said was unfair. Well, what the reality is that for the most part, not entirely, but for the most part, the law is what the contract or the lease actually says when it is signed. That's what makes it defensible in court. So you want to make sure that you understand and agree with all of the elements, clauses, points in a commercial contract or a lease before you sign it. And you have to understand it. It's a great place where you should be contacting your attorney to get that clarity. There are basic elements that make a contract legally binding and defensible if challenged. The first step and the beginning of most contracts is the identification of the legal entities that are entering into the contract. Most of you that have signed agreements, you will know that almost the very first clause is, this agreement is between this person or this entity and this person or this entity. So what are the primary elements that make a contract a whole contract? First of all, it has to adhere to any laws in the jurisdiction in which it's signed. Sometimes there can be some minor points about this, or some points that in a city, county, and the state, most of it's governed by state in most of these contracts. Sometimes there is federal oversight, but for the most part, it's governed by an individual state. And in it, there has to be an offer. One of the parties has made a promise to do or refrain from doing something specified, some action in the future. And the offer was then accepted unambiguously, and then the clarification back and forth. Oftentimes, what you see prior to a contract being done, either a commercial contract, a buy-sell agreement, or a lease, you will see what's called a letter of intent, or an LOI. That is where you start really laying out in writing the non-binding negotiations of what you want to have in the contract when it is prepared. So an LOI typically precedes an actual contract. Then you've got to have some consideration. So there's something of value that was promised in exchange for the action. The parties both understood and agreed to the basic substance and terms of the contract, and the capacity of both parties to understand those terms, the obligations and contracts, has to be clear. You can't ask somebody who is mentally impaired to sign a contract and expect it to be binding, for instance. So let's move on to leasing. Here's some leasing basics. I have been involved in leasing, as I think I mentioned, for many years. I've probably done over 3,000 commercial leases at one point in time in my life, and I enjoy helping clients with small business clients with their leases, although I don't practice law relative to them, but I can certainly advise things that are critical in a lease, and that things that you should be either referring to, negotiating in or out, or dealing with it in one way or another. But as I've mentioned before, across the board in a commercial lease, the law is what the lease says when both parties sign it. One of the things that I deal with a lot is that in a residential lease, when you're dealing with your home or your apartment, the place that you're living, a lot of people feel that that the residential lease is a lot, when they go and get a business, that the commercial lease is a lot like the residential lease. There is a lot of landlord-tenant law in a residential lease, at both at a city level, county level, and a state level. And so there is an awful lot of landlord-tenant law that can deal with when you're dealing with somebody's home or your home, or the place that you live. That is not typically true in a commercial contract. These commercial contracts, leases, can pretty much say what they want, and it's going to be defensible or not based upon what it says when both parties sign it. So every word counts. The two most likely challenges and items of a conflict after a lease is signed include parking and HVAC. When I have worked with clients who have problems with their lease, then but across the board, the two biggest issues are, wait a minute, I thought I was going to have a place to park when I had my business here for both my employees and my customers, and now I don't. And the other thing that happens after a lease is signed is, wait a minute, who's in charge of the air conditioning and the heating? Who's in charge of managing that? It's unfortunate, but a lot of leases written by landlords today say that the tenant is in charge of and responsible for the entire HVAC system. Even if it's an old system and it goes out, then many commercial contracts that I'm seeing show that the tenant is responsible for replacing it or whatever that cost is. So my point here is that you've got to pay attention to what the lease says and make sure that you're fine with the terms in it and understanding every word. And it's a great opportunity to communicate with your attorney about these things. And then, like I mentioned, in a commercial contract, it's important to be clear which parties are on the lease. As a contract, it should include the LLC or corporation of which the landlord is a part, and it should include the LLC or corporation that the tenants are a part. Landlords almost never use their personal names, and a tenant, commercial small business tenant, shouldn't use your personal name either. What happens in a case like that is you use your legal entity, your LLC, and that means then that the lease is between your LLC and the landlord's LLC. And that should provide you with some protection as long as you're following the 5 steps to corporate compliance. The caveat, though, is that most leases today, the landlords are requiring personal guarantees, in which case that's something that you should negotiate. And there are some ways in which you can negotiate this issue of a personal guarantee. But keep in mind that if you have your personal name at the top of the lease, identifying that the lease is between you as an individual and the landlord's corporation, then there is no need for a personal guarantee because you are already personally identifying yourself as the maker of the lease. So what happens in the case of a lease default? It's one of the things that I like to let people know. If at some point in time there is a lease default, and we're seeing a lot of this discussion going on right now in the midst of this COVID-19 recession, because leasing is one of the single biggest elements of most people's cash flow that's very hard to change. In times of recession like this, you can reduce your payroll, reduce your cost of goods sold, cut back on other expenses, but it's hard to cut back on your lease unless you have a landlord who's really willing to negotiate with you. I'm going to talk about things that you can negotiate here next, but in a default, if you, for whatever reason, stop paying, typically the landlord is going to file a lawsuit and have you served or your registered agent served for the unlawful detainer and or the recovery of the losses. And they will typically engage an attorney to file suit. That attorney will hire a process server who will have the defendants or the registered agent served in person, which is required by law. And in any legal action, one of the first things that happens is the court requires the plaintiff to provide proof of the service of the lawsuit. The defendant then has 20 days to hire an attorney and file a response to the court with their best case, explaining why this lawsuit that they're being served with shouldn't apply. If you're going to do that, and I always recommend that you do, you have to hire an attorney, and you have to file that response within the 20 days. Everybody's got a case to make, and I always recommend that if you're getting into this kind of a situation, that you be sure and hire an attorney, hire them early on. The court doesn't want to hear from you when you get to this kind of a lawsuit stage, and you're always going to be better off finding an attorney who will help you negotiate the pathway through this lawsuit. The landlord then may file some motions, each of which has to be responded to. One of the most common ones is a motion for summary judgment. There can be others, but if you do not respond to these motions, then oftentimes the landlord is going to be issued the summary judgment, the request for the motion, and that will then be issued, and that ends the lawsuit, at which point in time they can go to collections, put this on your credit report for pretty much forever until a judgment is paid. And so you always want to make your best case, fight each of these items as best you can with the help of your attorney. Then if any motions are not successful from the landlord, a hearing is typically scheduled 12 to 18 months out based on the court's caseload. And during that time, the court really expects both parties to attempt a settlement. And in my experience, about 90% of these cases are settled in some manner prior to the legal hearing in the real estate court. So it's absolutely worth your doing that. Oftentimes it will force the landlord into having some sort of a negotiation rather than just accepting a summary judgment. And oftentimes a summary judgment that winds up because the small business owner did not respond quickly or appropriately or try and make a case. What happens is that summary judgment stays on your record, and they can pursue you for that indefinitely. And so it's just not worth it. They can also would get the summary judgment for whatever amount they were asking of the court, which might be the entire remainder of the lease. I did have a client who failed to respond, wound up with an $80,000 summary judgment, and I believe that it is still on their record, and it's been very difficult for them to get another lease, to open up another business, etc. So I always recommend that if you do get served, you hire an attorney and do your best case to negotiate a settlement rather than going through that summary judgment. So all of these things are negotiable in a lease. The usable square footage, the percent of a total project. So these are all things you want to know. The rent per square foot or per year, or the base rent per month. The method and items in additional rent or the triple net. You cannot negotiate the dollars of the triple net, but you can and should know what is included in the triple net. Are they including management fees? Typically, triple net is the direct pass-through of the costs that the owner is incurring. And most of the leases describe a triple net. So that you know, a triple net includes the common area maintenance. So whatever maintenance there might be, could be including parking lots, lighting, landscaping, security, snow removal, cleaning of common area spaces. In some cases, it might include heating and HVAC. Other cases, it is going to, the HVAC, as I'd mentioned, may be the responsibility of the tenant, depending upon how the lease is written. So you have to know what is in the common area, and you should, before you sign a lease, you should always ask for the most recent reconciliation, which would give you the list of all the expenses, and you can see what those typically run for a year. But oftentimes these are going to add several dollars per square foot per year to your rent. So you've got to realize that your rent is going to be the base rent plus this triple net in many cases. Not every lease has a triple net. There are other methods for doing this. Sometimes it's just a percentage of a common area. But whatever it is, you have to be able to read and understand how this is going to impact your money and your cost of renting this particular space. Is there a tenant improvement allowance? Oftentimes, when it's more of a tenant's market, which it is in many cases right now, because of the fact that people are discovering that their businesses can operate just fine working from home. It's certainly not true with all, but many. And so they're not renewing leases or negotiating a way out with a landlord. So they may be, as an enticement to get a new person in, offering a tenant improvement allowance to fix up the place. Most often, landlords only want to fix up a place to the extent to which it creates a shell that could be leased to any type of tenant. They don't want to pay for the individual tenants' improvements that are specific to their type of business, but they can provide a tenant improvement allowance as an inducement to enter into the lease. You have to then pay attention to the dates. There can be a commencement date, a rent start date, a date of possession. All of these things can be identified separately in the lease. Are there months of free rent? And as I mentioned, what might be the rent commencement date? What might be the occupancy date? Also, what's the length of term? What are the options to renew? Options to renew are important. A lot of landlords really don't like to give these out, or they certainly don't like to extend them, because an option to renew is binding on the landlord. It is, as long as you follow the terms of the lease, it is at the tenant's sole discretion to renew, as long as you get it within the window. So what are the rent escalations? What are the brokers and brokers? Who are the brokers and those commissions? A big one is the use of the premises. You've got to be very clear on everything that you will or might use the premises for. And this has to wind up in the lease contract. A lot of people say, I'm going to use it for retail, but then they discover later that somebody else in the complex has an exclusive, and they can't actually wind up selling things. So you've got to be clear on the use, so that you don't come back later and be saying, mother may I, or landlord may I. You have to identify the terms of a sublease. Are you allowed to do it? And if so, what are those terms? More often than not, landlords are very hesitant about this. And if they do allow it, they're going to require you to notify the landlord of the terms of the sublease and the qualifications of that sublease tenant. Is there going to be a personal guarantee, and what are those terms? What are the limits of the insurance coverage? A lot of them are much higher than we have today, which is unfortunate. But some of these things are negotiable, but you want to make sure that you're covered, and the landlord certainly wants to make sure that they're covered. As I mentioned before, what are the terms regarding parking, HVAC, and signage? All of these things get covered in the lease itself. Conditions of the premises. You've got to go in, you've got to inspect everything and make sure that you understand what it is. A lot of leases are going to say that you are renting as is. And if you didn't notice that something was wrong, then that's your concern after the lease is signed. So is there anything odd about the space that would cost dollars in tenant improvements to make it more useful? And are there any additional rules and regulations? Oftentimes today, leases, particularly of multi-tenant buildings or malls or strip malls, are there any additional rules and regulations in addition to the basic lease terms that need to be understood to see if they're going to work for you and whether or not this is the right place for you to be? So that's the end of the presentation. I'm going to go into questions next, but before I do that, I wanted to share a little bit about us at the Small Business Development Centers. We were created 40 years ago. We're in our 40th anniversary now by the Small Business Act as a federal state partnership. We are actually administered by Washington State University, and about 2/3 of us are actual employees of Washington State University, myself included. And then we have some management oversight for the federal portion of our dollars in that state federal partnership. And that oversight is from the Small Business Administration, which I have to mention is something organization that we have a really, really good collaborative relationship with here in Washington and work with closely. Many of you have been on some of the webinars that we have been doing through the SBDC and in conjunction with the SBA on the PPP loan forgiveness. We've got more of those coming up. You can find those, by the way, at our website at wsbdc.org. But if you want to contact an advisor or find one that's close to you, if you're not working with us now, please do. You can do that here at wsbdc.org, contact an advisor, or you can email us directly, washington@wsbdc.org, or 833-492-7232. That's 833-492-7232. With that, I'll go ahead and get onto some questions. And I will go through them as I see them. So if you've got any more based upon what we've been talking about, please let me know. Theodore says, can a director or a board of director member perform work for the corporation without being an employee? Well, if you're a corporation and you are on the board of directors, but you are not a W-2 employee, you should not be doing actual work for the corporation unless there is some specific arrangement for that. Typically, people can be stockholders, but they cannot work in the corporation unless they become employees. The other thing is that there is a right to work law, which states that if you are doing real work for a for-profit entity like a corporation, you cannot actually just volunteer. So certainly in Washington State, where you run into problems with this, is that every employee has to be covered by workers' compensation insurance. So if you've got somebody who is doing work for a corporation and they are not covered by workers' compensation insurance, and that person then gets hurt on the job, typically they go to the emergency room or to a clinic. And if any of you've been through this, you know that one of the first questions that's asked at a clinic is the fact of, where did you get hurt? What were you doing? Were you employed at the time? And if somebody says, yeah, I was doing this work for X corporation, then they go to Washington State Department of Labor and Industries, and they ask for that employee's worker compensation account, because that's how the hospital or the clinic would get paid. And if they don't have one, there's an immediate investigation of the business, the corporation, and they wind up going through that and may wind up paying both the total dollar amount of the health cost, as well as penalties, interest, back premiums for the workers' compensation and such. So everybody has to be covered by workers' compensation if they're doing real work in an organization. So it's illegal to actually just volunteer and not be covered. Good question. So question regarding the 5 steps of corporate compliance. Does the business account need to be a business checking account, or can it be a regular checking account? Well, it should be a business checking account. You do not want to have a personal account managing the accounting of your business, because then you are violating the commingling of the assets, meaning that if the business income goes into directly into a personal account and can get used for personal, it's very difficult for you to actually complete the Schedule C of your 1040, because it's real hard to determine what was used for personal and what was used for business. Because the idea here is that all the profits of an LLC that's not an S Corp are taxable. And so that gets placed on the Schedule C. Your CPA or your tax preparer would help you do this. Then you have the allowable business deductions, which all have to be documented, and the records to support it have to be there. And all of those records then determine what the actual net taxable profit is on your 1040. So if you're commingling your business account and your checking account, it's going to create real problems for you. Is a Washington LLC required to carry insurance? Any type to do business? Insurance is typically required if you are leasing property, but just having a business in and of itself does not, there isn't a law that says that you have to have business liability insurance or business property insurance. Keep in mind that there are multiple types of insurance. If you are renting a space, the landlord wants to know that you are going to have insurance for business liability. You wind up getting sued by somebody, or they have a trip and fall within your space. The landlord wants to know that you're covered and that that's not going to wind up on them somehow. Then if there is damage such as maybe a flood or something else, they want to know that you have insurance that's covering your personal business property and that it's not going to wind up on them somehow. So you've got to keep those things in mind. It's very smart and highly recommended for every business to have insurance. And if you are a professional business, you're going to want to have errors and omissions insurance in addition to your business liability and personal property insurance. So again, an insurance broker is one of the professionals that most businesses need to engage. And I highly recommend that you do that. Can a landlord unilaterally decide not to extend a lease after its current term expires? If there is no option to renew, the landlord absolutely can, and they don't even have to give you notice. So if you've got a 5-year lease, you do not have an option to renew, you do not have any kind of negotiation with the landlord to add an amendment to or write a new lease for an additional 5-year term, say, as an or whatever that might be. Two things that happen. Most of the leases have an automatic clause that says that if you are still in the location after the end of the lease, your rent goes to 150%, maybe 175%. I've even seen 200%. And so an amount is immediately due. Your rent increases substantially. And then they can also sue to evict you. And they don't even have to give you advance notice. At the end of a lease term, it's assumed that you know the end of your lease and that you will be leaving, or you will be paying the penalty if you stay. And then how it follows through up after that is entirely up to the landlord. Back to the workers' comp issue. Does an individual who is a single member LLC have to pay workers' comp? They do not. It is optional for owners of a business, and this is true in any LLC. You can opt in. Washington State allows for an opt-in clause for workers' compensation and unemployment. My personal advice is it's smart for you to do that, especially depending upon the kind of health insurance you may or may not have. So it'd be smart for you to get the workers' compensation insurance, depending upon the kind of work that you're in. But if you get hurt on the job, then you would be covered. But that's a good question. It is optional for owners of a business. Maybe I did skip over one, Theodore. Other than filing for an 8A2 to elect C corporation taxation, does a Washington LLC need to do anything else to be ready to file its corporate taxes? Well, typically an LLC doesn't file for C corporation, it files for S corporation. And it has to elect that with the IRS. It's typically done at the beginning of a year. Can be done if you work with your CPA during the middle of the year, but an LLC is typically not going to elect to be taxed as a C corporation, because if you do, you're going to be subject to, as I mentioned, to double taxation. And so keep in mind that almost all payroll taxation for employees and for the legal entity, either the LLC or the corporation. These are all determined on profits and income and deals with federal IRS. The state level is more likely to be dealing with workers' compensation, unemployment insurance, and the limited liability protection of the legal entity. So always keep in mind that federal taxations are what the C Corp, the S Corp deal with under the certain rules that govern those within the IRS, and the limited liability and the legal issues are more prevalent on the state level. So keep that state versus federal fairly distinct in your mind. Wanted to clarify about using a regular checking account for business. If this regular checking account is used only for business, would it still be a problem? You would have to truly identify the fact that this is only being utilized for business accounting. If you've ever opened up an account in a bank, because the business bank accounts are subject to separate state and federal regulations. I helped my son open up one about a month ago at BECU, and had to establish several things. First of all, was he a licensed business with a Washington state business license in the state of Washington? What kind of a legal entity was he? And then was he going to be making major cash deposits? Was he going to be dealing with the cannabis industry? They really do want people in the state of Washington, if you are a business established by Washington state with either a business license or an LLC or a corporation that then has a business license, they want those things to be in separate business accounts because there is separate access, audit capability of a business account that is different from a personal account. So I personally would never advise somebody to use a regular checking account that's identified as personal for their business. I don't think that that's appropriate. I'm not here to say that there's a specific law against it or that you couldn't figure out how to do it, but it would never be my advice that you go that route. So I think that's all the questions that I could see. I want to thank everybody for joining us today. I think we are just about 2 minutes off of our time. I understand that you either have gotten or can get this slide presentation. I'd really encourage you to reach out to me and would look forward to it. And you can get me at washington@wsbdc.org if you want to. Ask for Steve Burke. I'm based out of Tukwila, and I've been with the SBDC for almost 11 years. As I'd mentioned, this is my second recession, and my hope is that I'm not involved in a third one because I really understand the struggle that many of you are going through today. That's why I wanted to get clarity. I've been dealing with person after person right now who really doesn't even understand their basic business accounting, what their legal entity is. One of the mistakes that we find, by the way, just as an aside, is that people who get an LLC or a corporation don't recognize or realize that that doesn't mean that that LLC has the right to do business in the state. They have to go and get a business license for that legal entity from the Washington Department of Revenue, whereas the LLC or the corporation is created with the Washington Secretary of State. So keep that distinction in mind. It's 2 o'clock. I'll stop because I know that you're moving on to the next thing. Thank you all for coming.